Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with the analysis of the gold market. So you can see yes, the market showing some bounce. Actually we talked about this because of the hourly chart butterfly pattern, and we said that market should reach at least 1860, which is a minimum target of the butterfly, 30% retracement of the whole butterfly's body. So and you can see on recent performance mostly this target has been completed. The bounce actually stands not because of the CPI numbers as it might seem at the first glance, as the headline suggests that it is positive as inflation has jumped not as fast, and it suggests for a few decimals inflation stands lower, and that's why it's really great achievement. But in fact, as we already said today in the Forex video, we suggest that it's really PT time for the United States economy. It's because maybe inflation has not become faster, but it stands around 8%, but it also becomes wider. So if you take a look at the structure, how inflation is distributed among the different spheres, you will see that now it is start entering into services, which is actually 70% of the gross domestic product, into the medicine, other social spheres. So they are spreading and entering in all aspects of the public life. So this is really not good sign. So it suggests that structural inflation that we have discussed is still there, although maybe Fed makes some progress in the controlling on the monetary inflation. So we think that it's too early to celebrate the success. So first moment. Second moment is actually why recent bounce stand on the gold market. It stands because of the dynamic of the interest rate. So if you take a look here, you could see what's going on the 10-year yield. It's now is dropping to the 283. So this definitely suggests some existence of the demand for the bonds from the investors. Why it is happening? So we can take a look once again on the United States S&P index. You could see from where money are going on the bond market, from the stocks. This is actually precisely the moment that we have discussed in our recent weekly report. We said the Fed vitally needs to recover the demand for the bonds, because other words, United States stands at the edge of the default, because Fed currently has no money to refinance existing debt and to serve it. It needs approximately $8-10 trillion per month to do this. 2 trillion for new issues and approximately 8 trillion to serve the existence and refinance the existence debt. That's in the condition where they're also starting the quantitative tightening, when they throw more bonds on the open market. So investors have to absorb not only the new issues, but also the old issues that now stands on the balance of the Fed. This is just strategy. Of course, nobody would like to buy the bonds with the minus 8% of the real yield. So that is the headache for the Fed, and they somehow need to attract find the money to finance the existence huge United States debt. They can't count anymore on the European money and on the Japanese money. It's just because with the rising of the commodities prices for the 80%, Japan has lost the positive trading balance. Its current account now stands about around zero. So there is no new investments will be in the debt overseas. So that's shortly speaking. And this is why we have said that we expect a collapse on the stock market within the few months. So all this stuff you could read in detail in our weekly report. But why I'm talking about this is just to explain why the actually gold market right now stands in some pullback. This is in general supportive for the gold market. It's just dropping on the interest yields. And on the lower time frames, take a look. We have the bounce here from this area. And we, if you remember, considered two levels. First one is around 1865. Next one, which we treat as the most useful in the short-term trading, is around 1886, 1895. It seems attractive for possible considering taking the short position. Or at least placing stop above this area. Because this is clearly is an invalidation point for a short-term performance. Because if market will break it up, it breaks the consolidation. It's moving, forming the bullish reversal swing. That might lead to the deeper retracement to the upside. But currently, it seems a very reliable level. Another reason why I think that downward action is not over yet, first of all, is the actually OP. Here's the market hasn't completed the OP yet. And even if you use as the A point nearer standing, lower standing point, where the downward action indeed has started, you could see that target still hasn't been reached for $2. So usually gold market never leaves untouched the important targets. But at the same time, we see here some positive moment. It's just take a look. The overall CD leg shows the slowdown. And potentially, as we are counting on this large cartridge triple to buy pattern, that might be the good sign. In general, guys, if you're trading on the weekly chart, you could not wait for this minor $2 completion of the OP, because this is just very small scale for those of you who would like to invest and those who would like to who trade on the higher time frames. Mostly the setup is already stands in place. So here's just minor fluctuations that mostly make sense for daily traders and those who trade on intraday charts. So that's what we have here. It's the same here. On the hourly chart, guys, initially we said that you could consider two levels for taking the short position. First is the completion of this target and reaching of the 30% of the butterfly, and next one is the hour level that we discussed on the 4-time frame chart. With this recent performance and this really strong upward action right to the OP, and in the current performance of the 10-year yields, which is dropping, gold actually has chances to show another leg up to the XOP target. Currently, it's difficult to say what this will happen definitely, but chances exist. That's why, if you plan to go short and you do not want to miss the possible downward action, or you're afraid to miss it and you're just worried about that you can't take the position in time, make it easier. So just take some minor position here, because market's already moving lower, so maybe it will show the direct downward action right from here. And then see what will happen. So, for example, take the 1/3 of your position around this level. If market jumps further, back to the 1880, 1886, completion the XOP, you will take the 2/3 there, and your average price will be very good. So, that's possible compromise that you could follow in the current situation. So, that's actually what we have on the gold. Let's keep watching. And most interesting stuff should start as soon as market will hit the 1830 level.